Welcome everyone to Vested Interest. This is Shane backing in for another stock pick of the day video. It is December 27th. Quickly wrapping up 2023. Hopefully you have plans for 2024. New Year's coming up here shortly. Let me know in the comment section down below, how are you going to celebrate the new year? What goals are you setting, if any? Do you set goals, or do you just roll into the new year as any other year and take it as it comes? That's kind of what I do. But if you have goals and you are doing some things different in your investing or personal life, go ahead and drop it in the comment section down below. Today we are going to cover a consumer discretionary stock here, Nike. Just do it, or everyone's an athlete, whatever their most recent slogan is, or one of their many slogans. This is one you're probably familiar with, the old swoosh. Nike Air Jordans back in my day were the big thing. Let's jump right in and take a look. Now, if you want to know more about this company, check them out at www.nike.com. That's www.nike.com. That is their homepage where I pulled this information from. And again, you're probably well aware of this company. Nike has been around. It's been a big deal, especially the Jordan era, the Air Jordans back in my day. Early 90s, all through the 90s. Even now, I think a lot of the sneakerheads out there is what they call them, I believe. Drop a comment down below if you are a sneakerhead and our Air Jordans still the thing, or are there other sneakers? I don't run in that community, but maybe there are some people who watch the channel that do. Let me know down in the comment section. Are Jordans still, the talk of the town, or what sneakerheads are looking, or are there other shoes that have taken over? And as you can see, this is what they think of themselves. We create innovative, must-have products. We build deep personal connections with consumers, and we deliver an integrated marketplace with compelling retail experiences. So they're a retailer, right? They sell shoes, they sell apparel, workout clothes, featured. There's their Air Force Ones, Jordans, Metcons, Air Max 270s. They shoes and all sorts of shoes, running shoes, basketball shoes, tennis shoes, you name a sport, they have a shoe for it. Clothing, all clothing types for men and women and kids. Let's talk about this for a minute. If you are buying Nike apparel for your infants and toddlers, you need to stop. That's ridiculous. Go buy cheaper clothes. You're paying for a name on a brand. They are not any better. Your kid can puke on, some off-brand shirt as an infant and a toddler. Do not buy your infants and toddlers name brand clothing. It's a waste of money. I have two kids. I'm just going to tell you that right now. If you are buying your kids toddlers and infants specifically, as they get a little older in middle school and high school, maybe because of the, people teasing them if they're wearing name brand, I wouldn't even worry about that. I wore hand-me-downs, and teasing is just part of life. Kids are going to have to deal with it at some point. But that's just a waste of money. So stop doing it. Go get your kids off brand. I don't want to tell anyone what to do, but I would stop doing it. That's what I would recommend you do the same. It is a waste of money to be buying an infant and a toddler Nike, any name brand clothes. Anyways, this is a retailer. They're out of the consumer discretionary sector. You may be well aware of them, probably are well aware of them. Let's keep on rolling here. Sorry to get on a little soapbox there, but I just thought that needed to be. When I saw kids, infants, toddlers, kids shoe, I just had to stop and address that for a minute. All right, we are talking about Nike Inc., ticker NKE, out of the consumer discretionary sector. Closed out the day at $107.13, down 0.82% on the day. Not a huge drop, a lot of green in the market actually still. One of the companies that was down, so I thought I'd take a look at them. Plus, they just had recent earnings, and a lot of people are talking about this right now, so thought I would jump in and do a video on them. 52-week range as low as $88.66, as high as $131.31. They are slightly leaning towards that 52-week high, kind of floating in the middle there. Average volume of 9.5 million. Today's was 9.7. Pretty much a sell-off from start to finish. A little bit of volatility throughout the day overall. Market cap of $163.042 billion. So a large cap company here. Beta of 1.08, slightly more volatile than the overall market. Price to earnings ratio, much like Apple yesterday, I feel the same way about this one. $31.14. PE ratio is very elevated in my opinion. Hard for me to justify a company like this that's been around as long as they have. I get it, same thing. They're still growing into some areas like India and China, and some developing nations are still growing in those areas, but that's a very high PE, and you need a lot of growth just to justify it. Earnings per share, EPS, sitting at $3.44 per share. Next earnings date somewhere between March 19th and March 25th. Like I said, they did just release their earnings. That's why it's so far out in the future. They released their earnings quarterly. So they just released it. If you wanted to check them out, go ahead and type into your Google search or whatever, Ask Jeeves, whatever you're using as a search engine, Nike earnings, and you should be able to read their most recent earnings report. For dividend, $1.48 paid out on the year. They are a quarterly payer. Decent dividend yield, at least compared to companies in this kind of same niche. 1.37%, a little lower than I like to look at, but it's all right if it's paired with high growth. Ex-dividend date December 1st, so we just passed that. Looks like they're going to pay out in January 2nd. One-year target estimate of $123.95. So they see this creeping up over the next year, not quite getting back to its 52-week high, but higher than it currently sits. So there is some upside appreciation in the stock price, at least according to Yahoo Finance. And let's jump over and look at dividend yield theory. To do that, you'd click on statistics. If you were on yahoofinance.com where I pulled this information, you click on statistics, you go down to dividends and splits. You look at their 5-year dividend yield average, 0.97. You compare it to its current, 1.37. Over here, forward annual dividend yield, 1.37, same number. And since it is higher, that speaks to some undervaluation, at least according to dividend yield theory. Now, I like to get into the financials of a company, and you should as well. If you are an individual stock picker, if you are buying stock in individual companies, you need to understand the balance sheet of the companies you are buying. Look at the income statements, the balance sheet, the free cash flow, debt to equity ratios, assets over liabilities. Is their revenue growing? Are their margins expanding? Are they buying back shares? A lot of good information. Are they paying down debt? Are they repurchasing shares? What we like to look at here on my channel is dividend growth and free cash flow growth. If you have free cash flow growth in a company, typically the dividend growth will follow that free cash flow growth. 2020, 1.3 billion. 2021 up to 5.9 billion. Big jump up there in 2021. 2022 back down to 4.4 billion. And in 2023 looks like 4.87. So overall from 2020 to date here, definitely seeing free cash flow growth. You're also seeing repurchase of capital stock. So in 2022, let's talk about that for a minute. Even though it looks like there was a bit of a downturn as far as free cash flow goes, there was a huge increase in the repurchase of capital stock. They're repurchasing their own shares. Same thing in 2023. They saw not only free cash flow growth, but also a significant uptick in how much they're repurchasing their own shares, which is good if they're doing it when it's undervalued. And right now, again, at least according to dividend yield theory, it does appear they may be slightly undervalued. Now, I like to look at more than one source. I recommend you do the same. Pick any sources that you like. Another one that I like is stockanalysis.com. And according to the 32 stock analysts, they have taken a look at this. They call it a consensus buy. They have a low estimate of $92, which would be a 14.12% decrease from where it currently sits. And that would also come with a higher yield, right, if you were to wait for it to drop a little bit lower. Average estimate of $125.75. That would be a 17.38% increase. That's also in line with what we saw from Yahoo Finance. And they have a high estimate of $156. That would be a 45.62% increase. All the while, you could collect that nearly 1.5% dividend yield. Now, I like to get into the statistics here. They show the information just in a little different way, and they cover some different statistics. I like to look at return on equity and return on invested capital. I like 10% or better on both. Return on equity for this one smashes the 10% I'm looking for, 37.46%. Return on invested capital sitting at 18.18%, again, higher than the 10% I'm looking for. I like EPS growth of 5%. They're sitting at 14.40, so they see a lot of earnings per share growth over the next 5 years, and their revenue forecasted growth over the next 5 years sitting at 6.75. Now let's take a look at the dividends. Like I said, they are a quarterly payer. I will say that they pay out on the April, July, October, December, but they look like they're paying a little off schedule coming up here in January. So I would just say late December, early January for that fourth payment, but they are a quarterly payer. They do pay out 4 times a year. Payout ratio is low at 43.27%. I like 75% or better, so this definitely is below what I'm looking for. And they do have very nice dividend growth. Unlike Apple, which we saw yesterday, 10.76% double-digit dividend growth. So a higher starting dividend yield as well as very nice dividend growth. Now, I know there might be some of you out there because of the stuff in the past, the Colin Kaepernick stuff, taking a knee stuff. I don't care about any of that. I'm not a political channel. Take that stuff somewhere else. My money is green. It doesn't vote red or blue. It votes for where it can get the best return for me. So I don't get into the political stuff whenever I'm talking about finances and investing. You should separate the two as well. But if you don't, that's completely up to you. Please keep it out of the comment section down below. I will probably use the political angle to get some clicks here. You'll see that whenever I post this. Let me know what you think in the comment section below. But again, very nice dividend growth. December 2000, they were sitting at 27 cents. Jumped it up December of 2021 to 30 cents. Jumped it up again December 2nd to 34 cents, and just raised it again here December 2023 up to 37 cents. So I would expect another dividend raise here again next year, keeping in line with this nice dividend growth that they have on this one. This is the vested interest stock screener. This is how I look at a company on a high level. It's how we run through the videos. If I'm interested in a company, it meets the criteria here, 5 of 8 to be investable. If it's a financial company like a bank, must be 6 of 9. That's why the last one, the price to book, is highlighted in green. I really use price to book for banks. You can use it for any company. Just make sure whenever you look at price to books and it's not a bank, don't use the 1 or lower rule. Compare it to other companies in its sector. And let me know what you think about Nike. That is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell. Most importantly, hit the subscribe button down below. Subscribe to the channel. It really does help out my channel. It does help out with the YouTube algorithm. So does you watching to the end, hitting the like button, and dropping comments or sharing with anyone that you think that might find value. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Nike you'd like me to do a review on, drop it in the comment section down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.